Hey everyone, welcome back to Corporate Dakota, the place where we peel back the layers of corporate filings to see what is really going on behind the stock prices. And it looks like THUMZUP Media Corporation might have a few tricks up its sleeve. This time it certainly makes you wonder what kind of media they're actually involved in when you see the numbers today. We're diving into a current report from THUMZUP Media, Corp, to uncover what they've been up to lately, especially concerning their stockholder meetings and some pretty significant upcoming changes before we jump in. If you like getting clear, easy to understand insights from these official documents, make sure you hit that subscribe button. And we also have our Discord community linked in the description below where we unpack more of these filings and discuss investment styles. Strategy, so come join us there. So we've got a report from THUMZUP Media Corporation dated December 8th, 2025. This is a current report that means something important just happened or is about to happen, and they need to let everyone know right away. The big news here is that on December 8th, 2025, they had their annual stockholder meeting. This is where the people who own pieces of the company get to vote on important stuff and make decisions about how the company is run. The company is named THUMZUP Media Corporation, a Nevada-based company, and their ticker symbol is ZUP. They are listed on the Nasdaq Stock Market LLC. Now, an interesting note is that they are identifying as an emerging growth company. This usually means they are newer and a bit smaller and might have some advantages in reporting rules. Let's get to the real action, the meeting itself, and what was voted on. First up, they re-elected the entire board of directors: Robert Steele, Isaac Dietrich, Joanna Massey, Paul Dickman, and Christopher Enzi. These folks will stay on the job until the next annual meeting or until new directors are elected. This shows a level of confidence in the current leadership, or perhaps just a smooth continuation of their governance. Next, they approved the accounting firm Haney & Company to be their independent auditors for the year ending December 31st, 2025. This is pretty standard stuff, but it means a third party is going to check their financial books to make sure everything adds up. Now, here's where things get really interesting. Proposal number 3 is for a change of control. They are acquiring Dogehash Technologies Incorporated. This is a big deal because it means the company's ownership structure and potentially its direction are going to change significantly. This also had to be approved to meet Nasdaq listing rule 5635 subsection B for acquisitions. And as part of this acquisition, they are issuing new shares of their common stock soup. This is in excess of 20% of their currently outstanding stock, which is a significant dilution for existing shareholders and requires specific Nasdaq approval under Rule 5635 subsection D. Then they approved their 2025 Omnibus Equity Incentive Plan. This plan reserves up to 7 million shares of their common stock for issuance. This is often used to give stock options or grants to employees and executives to incentivize them. Proposal 5 is about approving the issuance of 750,000 shares of common stock to an advisor, American Ventures LLC Series XD8 Doge. This is for financial advisory services provided under an agreement from August 12th, 2025. This is another issuance of stock which dilutes existing shareholders. Finally, they approved the adjournment of the annual meeting. This means if they didn't have enough votes for something, or if conditions for the acquisition weren't met, they could push the meeting back to get more votes or information. This is a common contingency. Let's look at the actual voting results to see how strongly these proposals were supported. For Proposal 1, electing the directors, all nominees received a large number of votes for them. For example, Robert Steele got 6,545,067 votes from shareholders. This clearly shows they were all elected with a strong majority. Looking at the numbers for Robert Steele, election, there were 6,545,067 votes in favour, and only 22,483. Against this is a landslide victory for the directors. For Proposal 2, ratifying the auditor Haney & Company, the vote was overwhelmingly in favour with 9,334,377 votes. For it, this is a strong endorsement of their accounting partner. The vote for the auditor was a massive 9,334,377. In favour, only 15,446 voted against it. This is a clear sign of confidence in their choice of auditor. Now for Proposal 3, the acquisition proposal to buy Dogehash Technologies Incorporated 6,457,794. Votes were in favour. This proposal passed, but it is interesting to see that over 100,000 votes were against it or abstained. This suggests there is some disagreement or concern among shareholders about this. Acquisition despite it passing. The acquisition proposal got 6,457,794 votes for it. While that is a majority, it's worth noting over 100,000 votes were against or abstained, hinting at potential shareholder unease about this merger. Proposal 4, approving the equity incentive plan, also passed with a strong number of votes, 6,439,865 in favour. This plan to reserve 7 million shares for incentives also got a good reception from the shareholders. The equity incentive plan was approved with 6,439,865 votes. For it, this shows shareholders are willing to allow the company to use stock as a tool for employee compensation. Proposal 5, approving the advisor shares, proposal 6,495,178 votes. In favour, this means they will issue those 750,000 shares to the advisor. Again, this passed, but there were 70,000 against. This proposal to issue 750,000 shares to the advisor passed with 6,495,178 votes. This is another stock issuance, so it is important to watch how this affects the existing shareholders' value. Finally, Proposal 5, again this time for adjournment of meetings, got a huge number of votes in favour. 9,074,015. This shows shareholders are comfortable giving the board flexibility to postpone meetings if needed to ensure all business is properly handled. The adjournment proposal got a massive 9,074,015 votes. This is a clear signal that shareholders trust the management to manage the meeting process effectively and to take the time they need. Now let's put it all together. THUMZUP Media Corporation is undergoing some big changes. The re-election of the board suggests stability in leadership. The approval of the auditors is routine, but the acquisition of Dohash Technologies Incorporated and the significant issuance of new shares for both the acquisition and advisor services are the key events here. This means the company is likely shifting its strategy and expanding its operations or capabilities through this acquisition. However, issuing a large number of new shares causes dilution. That means each existing share will represent a smaller piece of the company, potentially lowering the earnings per share and the stock price. If the market doesn't react positively to the acquisition, it's a risky move but can also be a strategic one, if Dohash brings significant value. The approval of the incentive plan is standard for retaining talent, but again results in more shares being issued. The strong approval for adjournment shows trust in management's ability to navigate complex voting requirements. From a Warren Buffett perspective, we're seeing a company willing to take on significant strategic risk with this acquisition and share issuance. The real question is whether the future potential earnings from Dohash will outweigh the dilution for current shareholders. The market will be watching closely to see if this strategic move pays off. If Dohash integration is smooth and brings substantial revenue or market share growth, the dilution might be accepted. If not, existing shareholders could feel the pinch. So, what is my take? THUMZUP Media Corporation is in a period of transformation. The core question for investors is whether this acquisition is a smart bet for long-term growth or a costly venture that bogs down performance. The strong vote numbers for most proposals indicate general shareholder confidence, but the against votes on the acquisition and advisor shares suggest some caution from a segment of the ownership. The biggest risk here is the successful integration of Dohash Technologies Incorporated and proving that the value it brings justifies the dilution from the new shares being issued. An opportunity lies in the potential for synergies and expanded market reach. The clear conclusion is that this company is not standing still. It is making bold moves that will define its future. Alright, that is our breakdown of THUMZUP Media Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this acquisition is a smart move or a gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and it keeps these deep dives coming. Subscribe for more corporate insights, and don't forget to check out the Discord in the description for our community discussions. Thanks for watching. See you next time.